And good evening, guys, or actually good morning, depending where you're watching from. It is, sorry about that. It is 12:39 a.m. Here on the East Coast, New York time, Saturday, April 13th, 2019. So, like I said, either good evening or good morning or whichever, depending wherever you're watching from. I just want to make a quick video here on three topics. One, a quick review of this past week. A very brief review of, I don't know why I keep doing that. Sorry, guys. A very brief review of next week, and also a review or bring you up to date on those contrarian trades that I took last Friday. So um, I'll review those really quick too. All right. So as far as this past week, guys, the week started off pretty quiet. You know, if you go back and remember what we had for risk event, this is next week. Let me just bring back this week. So if you go back and look here to this past week, the three main pieces of risk event all happened on Wednesday. So Monday there was absolutely nothing. Tuesday there really was nothing to speak of. Wednesday, we had the ECB rate decision, and then the monetary policy statement, and those came out on Wednesday during the very beginning part of the New York session. At that same time, we also had US CPI came out, and then we had the FOMC, the Federal Reserve policy meeting minutes later in the New York session. And that was really it for the week, guys, in terms of, uh, really tradable. Why that is doing that. Um, and so basically, um, the week was pretty quiet in terms of trading. The ECB rate decision was pretty much as expected, so that didn't really do anything. It was pretty much neutral to what was expected. The ECB pretty much kept their dovish tilt, but they weren't any more dovish than they started, but they weren't hawkish either. So the euro actually did rally into the end of the week. So I think the market took it as probably a little bit more positive than they did negative. But at the time when it came out, it really didn't do anything. The US CPI came out, it was a mixed bag. The headline was really good, above expectation, but the core, when you take out food and energy prices, was actually down. So that was a mixed bag, so that didn't do anything. And then the monetary policy meeting minutes that came out during the New York session in the afternoon didn't do anything either, because the FOMC really did not change any of their guidance, and so it really was kind of a nothing burger. And also at that time of the day, the trading liquidity is pretty thin when you get into the late New York session. It takes a lot to really move the market at that time of day. So really that was it. And like I said, the beginning of the week really was nothing. So basically what we saw towards the end of the week was movement in the euro, probably based on the ECB, maybe, like I said, taking it a little bit more positive. We saw continued strength in the Aussie, and we saw continued weakness in the Kiwi. That's all residual stuff from the last week or two. So it was kind of trend continuation. And then we saw a little bit of action in the Canadian dollar too. Just a quick look at a couple of the charts. We look at the Aussie pairs. Again, the Aussie, this is all pretty much daily charts. And you can see the Aussie either strengthened off the daily charts. Although keep in mind, longer term, the Aussie fundamentally is supposed to still be weak. But here's the Aussie yen. It finally broke out of this sideways, choppy range it had been in for quite a long time here, really since the beginning of the year. And you can see we broke out of that actually on Friday, today or yesterday, depending where you're watching. And the Aussie Kiwi continues to be very strong. Of course, this is a combination of Aussie strength and Kiwi weakness. So we saw some, renewed strength in the Aussie. And the other reason why the Aussie was strengthening is because commodity prices have firmed up, and again, a little bit more favorable thought about trade with China. So that supported the Aussie. But, fundamentally, in terms of monetary policy, the Aussie is still not strong, but we'll see how long this positive sentiment can hold up. And then the Kiwi, um, saw some recovery today on Friday here. Either just not losing any more ground or moving up a little bit. But you can see, pretty much the rest of the week, the Kiwi continued its down ever since the Bank of New Zealand, the Royal Bank of New Zealand, took a more dovish tilt about 2 weeks ago. So for most of the week, it continued down. It kind of consolidated a little bit late in the week and today. But the Kiwi, I would continue to really be looking for shorts in the Kiwi. So, all right. And the US dollar really didn't do all that much this week. And then with the Canadian pretty much was supported all week, kind of moved sideways. And then again, we had pretty nice moves today. That was mostly because of the yen, but even the Canadian Swiss was up today on these daily charts. So the Canadian continues to be supported. It took a little bit of a hit earlier in the week as oil prices were down. I think on Wednesday or Thursday, but for the most part, the Canadian is still pretty well supported. But like I said, guys, the first couple of days of the week, really Monday, Tuesday, Wednesday, there was really nothing going on. I really didn't think it was going to end up being a good week, but the market woke up a little bit on Thursday and then early Friday, and there was some good trades to be had again, especially in the Kiwi, the Aussie, and the Euro. So that's it on this week. I ended up having a good week. I actually ended up about 11% in my account by the time the week was over. But when it started, I didn't think it was going to be anything. I thought I'd probably end up flat for the week, but ended up pretty good with the trades that I availed myself of on Thursday and Friday. So quick look ahead for next week. I'm not going to spend too much time. I'll do some videos next week on stuff that's coming up. Just go back to next week. Monday you have the Canadian Business Outlook survey. It could be pretty interesting. Monday night we have the Aussie monetary policy meeting minutes. This one I think will be interesting because the Aussie has been, as I said a few minutes ago, pretty well supported. But if the monetary policy meeting minutes are still kind of dovish, that can maybe pull the Aussie back down to earth. So it'll be interesting to see, after this rally for the last week, if these minutes do anything and kind of, like I said, wake the market up to the underlying more bearish theme of the Aussie. Or if they're not, then we'll continue to see the Aussie strengthen. The pound, like I said, I'm not trading the pound at all right now with everything going on with Brexit. And then we have Kiwi CPI on Tuesday and just at the beginning of the Asian session. And so that probably will be important, especially in light of the RBNZ taking a more dovish stance. They're going to be looking at data like this to decide their next move, if they're going to cut rates again or if they're going to stay pat. So CPI, which is inflation, is a very important number. Again, more pound news. And then we have Canadian news on Wednesday. Again, inflation number out of Canada. That will be important. We have OPEC meetings also going on all day. So, of course, that's oil, but oil is going to affect especially currencies like the Canadian dollar and maybe the US dollar because of oil production and really what they set the tone for the prices of oil in the market. And that has a very big effect, especially on the Canadian dollar, because that's their main export. So we have that, and we have Canadian CPI again and trade balance. So it'll be an important day on Wednesday for the CAD. And then during the mid Asian session Wednesday, we will, or Thursday morning, depending on where you're watching, we will have employment news out of Australia, again, will be important based on kind of what the Aussie's been doing lately. Its employment numbers are always pretty important. And then we have flash services, PMI, coming out of the Eurozone for France and Germany. And even though these are red, sometimes they don't really have much an effect. But again, given the fact that the euro was rallying pretty hard last week, these could end up being more important this time around to either reinforce the positive sentiment of the euro or to send it back down. Because again, overall, the euro is still bearish. The ECB is still bearish and dovish. So even though it rallied this week, I think eventually we will resume the bearish tilt to the euro, even though it was supported this week. And then Thursday, again, during the early New York session, we have core retail sales out of Canada and out of the U.S. at the same time. So, retail sales for the U.S. generally hasn't been doing very much. They have it as red, but unless there's a big deviation, I don't really expect this will do too much. But it could be more important out of Canada. And then that pretty much rounds out the week. Nothing really to speak of on Friday. So not a terribly busy week next week, but there's a few good risk event opportunities, especially with inflation and employment news. So, all right, so that's that. And the last thing, guys, is just to, as you guys remember, the video I did about a week ago, and you go back and watch it if you didn't, where I went to this Community Outlook site here on MyFXBook, and I took a bunch of trades based on absolutely nothing other than the position of traders. Any of these pairs where the retail traders were at least 70% long or short, I just went on a demo account and I took a trade. So for instance, I'll show you the trades I took. So I have this demo account. This is where I took the trades on here. So like I said in that video, guys, do not ever do this with real money. This was just kind of a fun little experiment. And basically the theory was, if you take a trade, let's say you want to go long because on that report, on a particular pair, the the retail traders were heavily net short, and so you went long. So an example would be the euro, let's see, euro kiwi. So an example would be euro kiwi now, where the retail traders are 81% short, 19% long. That's one where you'd say, okay, well, since the crowd is usually wrong, the retail traders are usually wrong, I'm going to just take a long position because they're also heavily net short. So that was the theory. I did not look at price. I did not look at, for a good entry point. I basically made a list of the pairs that met that criteria of at least 70% long or short a week ago, and I just jumped into a trade. And these were the pairs that I took. So I took these on April 5th. I took US Canadian short, Euro Yen long, Aussie CAD short, Aussie Kiwi long, US Swiss long. I took Euro dollar short. I was stopped out of that, and I re-entered on April 9th, and I'm still in that. The pound dollar short, I was stopped out twice on April 5th and April 8th. I did not re-enter that. US yen long, I was stopped out on April 5th. I did not re-enter. And Aussie yen short, I stopped out on April 5th, also did not re-enter. So I am still in these top 5 US Canadian, Euro yen, Aussie CAD, Aussie Kiwi, US Swiss, and Euro dollar. I'm still in those. And right now it's kind of a mixed bag. It does still show a loss, but the reason why it shows a loss, guys, is because you can see when I took the US Canadian, I took it as a full lot, and all these other ones you can see are one micro lot. So it's really skewing this, showing off $494. But you can see all the other ones, I'm either, slightly in the positive or on either side of positive. But so I would say at this point, probably will be a failed experiment unless the market turns around. But I wanted to give it at least 2 weeks. So I'm going to give it all this coming week because, again, I didn't take an entry with, I didn't look to, get in during a pullback or a correction. I just hit buy or sell as soon as I made the list. So I probably got some bad fills. Maybe in hindsight, I should have, kind of traded it the way I normally trade it, wait till a correction and then get in, just based on the contrarian data. But I didn't do that. So I'm not sure how viable this experiment will be. Maybe next time I'll try it with a little bit more, better entries. But let's let this go for another week. We'll see what happens. And I'll report back in about a week. But, as of right now, it's kind of a mixed result. But again, I think some of that was because of just the entries that I got. So that's the update on that. And I'll let you know at the end of next week how things turned out. And maybe we'll tweak the experiment, like I said, and try to get some better entries next time. All right, guys. So I'm going to wrap it up there. I hope you have a good weekend and a good trading next week. And I'll try to make a couple of videos on some of the upcoming risk event that I showed you for next week. All right, guys. Again, have a great weekend, and I will talk to you all soon. Make sure you comment, like the video, share it, like the channel if you're just finding it, and and I appreciate it. Okay, guys. Thanks again. I'll talk to you all soon.